All right, we should be recording. There we go. All right, let's go ahead and jump on in. Chris, thanks so much for helping set this up. For those on the call today, really excited to talk through the Ribbon program with you. I know Terry Weitzel's on the phone, who is really an absolute rock star. Obviously, you guys are very familiar with him, and so are we. You know, Terry does a lot for us on the Ribbon side, just helping us, better even understand the loan process behind the scenes. Plus, the ultimate problem solver, I like to say, in the lending space. And obviously, Ribbon works very closely, right, with the loan officer and you as the agent. If you have not sat through a training with us, the first thing I want to express is what wakes us up in the morning is to help a buyer pursue home ownership. That's what we believe in. And we believe in that through agent representation. So today we're going to talk through, what are we looking to do? How would we like to empower you as the agent in order to help more buyers this upcoming year? And so my name is Ryan Lance. I help lead our business development team, making sure that you guys have the education you need, the tools and the resources that you desire in order to support your conversations in the market, in order to provide Ribbon as another option or a solution, on your belt to their home buying process. If you guys would just keep an eye on the participants, because I have to manually admit people. So if you see anyone that's trying to get in, just kind of raise a hand at me and I'll make sure I get over there. Here's one. Okay. So on my screen, let's kind of talk through, why do we exist? And obviously, what are we facing in the market? And this is what we kind of talked about earlier on the call before we kicked off. But, everyone can agree, right? Buyer demand is through the roof. Supply levels are actually into the ground, right? Probably some of the lowest supply levels we've ever seen. And at the same time, we've got an increase in buyers. We've got lower inventory. We've also got cash-enabled buyers hitting the market, right? And so if you define cash-enabled buyers, we've got iBuyers, right? Targeting the existing home to sell. We've got institutional investors, looking to add properties, put them in their portfolio and rent them out. As well as just your normal cash investor. And so what that means is it's very challenging for your buyers that are pursuing, conventional FHA, VA. How do we differentiate and stick your offer out in that multiple offer stack, right? So I believe in the last 10 years, we've had 1 trillion in housing, okay, nationwide actually be bought by institutional investors. That's inventory we won't even see for the next 20, 25, 30 years because they're going to tuck it away and hold on to it. So we are a company that's designed to help the local buyer, right, that you're working with through your sphere of influence, make the most competitive offer that they can on their dream house. Because we understand, right, it's very hard right now winning an offer. And I think right now more than ever, you're really putting your psychology hat on as an agent, and that is the right expectations with my buyer about the market that they're just about to face. Right. And I'm sure you're having these types of conversations with them, letting them know about inventory levels, letting them know that, hey, when you find the right house, we're going to need to be ready to pull that trigger because of how hot and how strong it is, just even in this given kind of Carolinas market. So all that to say, the question I like to ask on the call is, how many of you last year, if you could have converted every single offer, okay, to a cash non-contingent offer, A, how many more offers could you have won, right? And B, how many more buyers could you have helped? So that's our approach. That's the lens that we're always going to look through because that's what Ribbon does, right? We enable you to take your buyer's offer and just simply convert it to a cash and non-contingent offer, help you guys win the contract. And so if you're familiar with Ribbon, we've got 3 different cash products that, myself and Terry are going to talk through a little bit today, because I think some ways, the best ways to explain this program is through storytelling. So we've got a few stories that we're going to walk through. But on my screen, you should see from left to right, the freedom to buy before you sell. Okay, let's focus on that one just for a moment. That solution is really perfect for, your sellers that are potentially concerned about selling their existing house too quickly, right? Chris and I were just discussing this because what if we put the existing home on the market, we get multiple offers, and now the perfect house has not come on. Well, now that seller's having to go move into temporary housing, right? So that's a move once, then move twice once they do find the right house, and potentially some storage in between. we feel like, and I'm sure you do too, that's what's keeping some sellers on the sidelines, right? How am I going to find my perfect house without selling my house too quickly? And if I do find the perfect house, what if I can't perfectly time both sales, right? How many on the call have been a part of a domino effect in real estate, right? Where you were under contract on that house to buy, yet the buyers on your existing home are falling through. And now we've got this whole trickle down effect. So, you've heard me mention where your buyers are able to make the strongest offer in real estate, which is truly a ribbon cash offer. At the same time, the reason our offers are even more powerful is because we are guaranteeing the sale for a seller, okay, or for a listing agent that's actually receiving the ribbon cash offer. That's truly the
It's
power behind it.
interesting.
And I'm going to unfold that for us here in just a moment. The freedom to buy before you sell is also designed so your clients can sell their existing house through you on the open market. Okay, we want sellers to sell for maximum value. Number one. Number two is we want to still allow you to remove the home sale contingency because that buyer had to sell in order to access the mortgage on the home to purchase. So that's our solution we call the freedom to buy before you sell. Okay, on my screen, the second cash product that you're able to leverage leaving today is what we call our offer upgrade program. This is really great for your multiple offer situations, or even your first time buyer right now just struggling in this market to win a contract, right? So let me just hit that real quick. There we go. So how many of you have had, a buyer where you're showing them property, weekend after weekend, right? They're becoming demotivated into the market. They're saying, hey, we've missed out on 3 offers. We might just renew our lease, right? Call us back in 6 to 8 months. We're going to go back to renting. We're just not quite ready. So this is a great way to help you guys increase your conversions and get the buyers, hopefully their first or second best option, not maybe that 6th or 7th best option. And so ultimately, when you have a first-time buyer that's looking to use our cash, we're going to help you remove their financial and home sale. They don't have a home sale contingency on that specific use case, but primarily their financial contingency. That way, when you present the offer to a listing agent, you can say, hey, this is ribbon cash backed. What that means is either this buyer is going to purchase this property through their mortgage, right, and their lender, or Ribbon's going to step in and guarantee the sale if there were to be a delay or if that closing were to fall through. And so, how many of you have spoken with sellers and the two most important things in their minds were, what am I going to net, right? What are my net proceeds? And what's the percentage of, what's the risk in this contract falling out? How well qualified is this buyer? So that's the goal in Ribbon taking our cash and backing it is to give that seller a guarantee so that we can get you a seat at the table when you're negotiating in multiple offer situations. The last item is what we call a deal save. Okay, so there are opportunities for us to potentially step in and save a contract that's falling out. So if you are already under contract and this domino effect is coming to you, I do want you to be cognitive of, hey, Ribbon could actually step in here and potentially save the breakdown. We just need to understand why it's breaking down, and we'll dissect that a little bit further. Awesome. So now you've kind of got a summary of the 3 cash products that you will have access to once you go into your agent dashboard in order to manage your buyers. From here, I want to shed some light on what does that actually look like for you as an agent on a real estate timeline. So I think some of the best ways to explain this is through an example. Let's say you've got a buyer that needs to sell Michigan in order to buy here in Charlotte. Has to sell Michigan in order to buy Charlotte. You immediately pick up on that and they are like, hey, Chris, I have found the right house in the Carolinas. I'm ready to rock and roll. I want to move forward with this property. You might say, hey, we need to look at the Ribbon option. Okay. They'll enable you to make a non-home sale contingent offer. And let's say you make a Ribbon cash offer and it gets accepted. Now what? This is still very business as usual in the transaction. Okay. Your buyer is still submitting their deposits. Your buyer is still having the right to their inspection period and their due diligence period. The buyers, and we require when you make an offer with Ribbon that they do have an inspection done. The buyers and the agents will lean on their inspector relationships, and the buyer will be responsible for that on their end, very business as usual. The reason for that is the only contingency that Ribbon has is an inspection contingency, primarily because we want to make sure your buyer likes the house, right? So your buyer has the flexibility and the autonomy in a transaction to say, hey, I want to move forward after seeing the inspection report or not. And there wouldn't be a fee due to Ribbon if your buyer said, hey, I want to go this is not the right property for me. I want to move forward for my next one. We would say, hey, we understand that. Let's go get the next one. But on my screen, what's really pivotal in our program is the guarantee once we are through the due diligence period of the contract. Okay. Put your listing agent cap on. If you have received a Ribbon cash offer and you're through the inspection period, you can go like this. You know that property is closing 100%. We are locked into buying the house. Either the buyer's going to buy it or Ribbon's going to buy it. And that seller that accepted our offer can know, hey, I can go ahead and start to take down all my staging. I can go ahead and pack my moving trucks. I know on closing day, this home is sold, so I can get to my next property. What that means for you as the agent is that's guaranteeing your commissions once we're through the inspection period. You already know, hey, I'm earning my buyer's agent commission, the full percentage on closing day, whether Ribbon buys it or buyer buys it. We don't touch a penny or percentage of that. So how the program works is dependent upon which route or which direction your buyer goes. Okay. Let's say they go the freedom to buy before you sell solution. That's, what, Ribbon, I want to buy my new house with you, and then I'm going to sell my existing house. On my screen, we call that our freedom to buy before you sell, which is fancy for Ribbon's going to reserve the new house. Okay. Ribbon will reserve the new house and give that client up to 180 days to then sell their existing house. We hope, right, on the open market for as much as possible. As soon as you even get a contract on the existing home, you're calling Ribbon and saying, Ribbon, we're set to close on the existing house, February 20th. Our transactions team high fives, and we'll go ahead and get the contract ready for the new house that we just bought for them, right? Ribbon will be the seller. Your buyer will be the buyer, and they will buy it back for the exact same price that we just purchased it on their behalf for. And that's you help them negotiate on that first closing. So let me pause there. Any questions on the line on that timeline?
I have a question, Ryan. This is Sherry Argabright. The 1% of buyer buys and 3% if Ribbon reserves, where do those funds come from? From the buyer? Is that like part of their closing costs, or where do those funds come from?
Phenomenal question. So let's talk through that. The pricing is different between which product that your client chooses to use, right? So we mentioned there was 3 products. There was the buy before you sell and the offer upgrade. To simplify, if you need Ribbon to reserve the house, okay, to purchase, it's 3% currently of the contract price of the home to buy. That is being negotiated on the front end, either in seller paid closing costs or in deposits between the agent and the buyer when you're making the Ribbon offer. So if we kind of come back to the front of the timeline on my screen, that's the same example where your client has to sell Michigan. They've now found the right house here in Charlotte. What we would do is together, let's say the contract or the sales price is $200,000. As the agent, you may make a $200,000 offer, ask the seller for 1.5% in closing costs. This is just an example, right? And your buyer would then be required to put 1.5% down between their earnest money and their due diligence. That way, when the offer gets accepted, the fee is already built into the transaction. We know where the 3% is coming from. It's either coming from seller paid closing costs or it's coming from deposits. Now, on my screen, on closing day, if Ribbon reserves the house off the settlement statement, we're going to collect 1.5% from the seller, right? And seller paid closing costs, that goes to Ribbon. We would wire in our $200,000, and the buyer's 1.5% in deposits would actually be a credit to us on the closing because we're the one buying the house. Deeds going in our name. Your client can now move from Michigan into Charlotte and take occupancy. And that's when they'll work to sell Michigan for as much as possible. And then they turn around and purchase the home back. That's the 3% solution, AKA the freedom to buy before you sell. Sherry, does that help shed light on how that gets negotiated and when it's being collected by us?
Yes. So since those deposits, earnest money, and due diligence normally go towards the purchase price, that's where you're saying that it's really being credited to you because you're the buyer. So it's going to lessen the amount that you're paying for the home.
You got it. Exactly.
Okay.
Exactly.
I'm sorry. I just had to think it through and break it down for my brain.
That's a
Thank
phenomenal
you.
question. No, it's a phenomenal question. I'm glad you asked it. I'm sure there's other agents thinking through, how that gets paid. You nailed it. So then if we work back up the timeline, right, on my screen, if we get to closing day and your clients were able to time both sales, so if they could sell Michigan in time, we do have advantages to our pricing. And that is only a 1% net cost of business if the buyer is able to access their mortgage on the first closing. And I get asked a lot, I thought this was cash, right? It is as good as cash because Ribbon is removing the home sale and financial contingencies to the seller. If the mortgage was to fall apart or if Michigan could not sell in time, that contract, okay, that's between your buyer and that seller. Remember, our addendum has been attached. Okay. That is stating that we will step in and purchase the home on the client's behalf, and it's guaranteed for that once we're through inspection period. So the door is still open for your buyer to step in and get their own funds. And that is only 1% of the contract price of that house to buy. Questions on that? Let me share maybe two examples. And Terry, I don't know if you want to add anything there, but I was going to jump to two case studies as well. But I want to pause for a second. Anybody else have questions on the difference between 1 and 3?
Hey, Sherry, basically, so think about it in terms of you're going to have 3% between EMD, DD, and seller pays on the contract. And then whichever direction we have to go to complete the purchase will dictate whether Ribbon gets the 3% or if we get to redirect 2% back to the buyer for the closing. So, basically, the last one that we did, I had one where he's probably getting ready to share. We used Ribbon to help negotiate the contract. It was an FHA buyer who had made like 10 offers, had been turned away every time. We connected her with Ribbon. Ribbon went in with their cash offer to get the contract. We knew going in, this lady didn't have a house to sell, so there was no need, to sell in order to buy. We knew going in we were going to give Ribbon 1%, but on the contract we had to show the 3%. So then at closing, on the closing disclosure, we got to use 2% of that money to complete her purchase, and we paid Ribbon the other 1%. So basically it was kind of insurance to help us get the contract, and that's how it worked out.
That sounds great. If for some reason something would go south, and I can't even think of an example how or why, especially on the example you just shared, because like you said, she didn't have one to sell, but she would need to be prepared if she wouldn't have gotten that 2% back. She would have needed to have in her bank account that to cover her closing costs herself, correct?
Well, yeah, if we have to repurchase from Ribbon later, she would have to have those funds available, the closing cost funds and down payment or whatever. We may use down payment assistance or whatever, but if Ribbon had to go in and complete the purchase, then later, yes.
Okay, so if they needed the 3%, then that she would need the, replenish that 2%.
That's right.
Okay.
Correct.
Yeah.
But most of those do most of those go at the 1% as planned for the most part?
Yeah, I haven't had any that I've planned that way that fell through, but we're doing our homework up front, pulling in all the pay stubs, W-2s, everything to make sure, income's there, everything we need's there. So you definitely want to, do all your homework up front on it.
Okay, good. Thank you.
Awesome. Great
I
question.
will say too, on the contract, when you're negotiating that, just like any other deal, try to keep the due diligence low in that piece of it, because, once y'all do inspections, if you do walk away from it, then it would still be like any normal contract. So you would want to try to go, maybe 0.25% of that due diligence and the rest of it earnest money or, a combination, but try to keep the DD low because that's what you're losing if you walk away ahead of time.
Yep. And guys, as the agent, you control that, right? You get to choose, hey, what, speak with your client, feel them out. Obviously more, multiple offer situations, we see heavier DD. But if your client's just on the more risk averse side, then like Terry's saying, exactly, right? Go a little bit heavier on earnest money, because if your client decided, hey, this is not my house based on inspection, then they would be forfeiting DD, but we don't need, we won't have to buy the house that they don't want to move forward with. Awesome. Okay. So, if you're sitting here today and you're saying, I have a seller, okay, that's either A, on the market right now, that's in this exact situation, struggling to, think about pulling the trigger on the new house because of how, low inventory is, and, or they're on the fence of actually putting the existing home on the market because they're not sure where they're going to go. If you're thinking, what are the steps to actually get started with removing your contingencies, right? It's really 3 steps. Okay. So first and foremost, in the chat line, I'm going to drop a link. If you do not have an agent account, it's really important to have an agent account because this is how you run all of your scenarios through with Ribbon. I think you're taking the right steps on the call today. First things first, understand this program. How does it work? Step number 2, be able to provide it as an option to your client, right? Should we upgrade to cash? Does this specific buyer that needs to sell first, would this be a good use fit? You can then provide it as an option for your client. Then ultimately you'll be able to, through your teamwork with our Ribbon advising team, choose the best solution for you moving forward. And so what that looks like internally is you can go into your agent dashboard. Okay. You can manage your buyers that you're actively working with. You can invite them and they can actually log in underneath you. So I don't want you to leave today and feel like this is all on your shoulders to communicate this process. Terry, myself, our Ribbon advising team, right? All parties involved are here to help support. How can we help your buyer win a contract and pursue homeownership? The 3 ways you do that is you add your buyer, you add the properties that they're interested in purchasing, what we call a Ribbon valuation. Okay, so an example of that is list price might be $291,000, and Ribbon might come back and say, hey, the max Ribbon value on that specific property that we could offer on is $302,000. You as the agent, along with your buyer, will negotiate from 0 to $302,000. That ball is completely in your court and you have full control over your negotiations. So what that looks like is, if we're sitting here on Thursday, you're showing your first time buyer that's been struggling to win an offer, 3 properties tomorrow on Friday. What I would suggest is we add your buyer today. Okay. You can upload their pre-approval letter, which is step 2 on my screen. You need to get them buying power. We do that through the form of an approval letter, very business as usual, right? Hey, Terry, can you run income assets credit? Let's make sure this buyer's in a great spot to purchase this house. You can go into the Ribbon platform, upload that approval letter, get access to our cash. And then today you can add those 3 properties that you're going to see tomorrow so that when Friday comes, hey, you're ready to pull the trigger. If your client says, Chris, this is the property. I want this one. I'm ready to move forward with the offer. That way we've got everything ready. We're being proactive. And you guys can choose which Ribbon cash product is going to be the best fit. Our Ribbon advising team, when you sign up today, in the link on the chat, you'll have your very own dedicated Ribbon advisor to walk you through this 3-step process. So I highly suggest you can schedule 3-way calls with the buyer, right? They're also speaking with the listing agent when you're making a Ribbon offer. The best way to explain this is yes, we are a technology company and a platform for you to manage your clients. We're also very much relationship based. Okay. So every step of the way, you'll have a team member walking you through that. Any questions on the 3 steps to making an offer or running an example of, hey, they might be looking at the Ribbon option. What do I need to do next? Sweet. Okay. Let's jump into a couple case studies. 926, want to be respectful of time, but let's kind of jump into how this worked on a few examples. So on my screen, you'll see an example of a move-up buyer. This client had an existing home to sell. This specific buyer actually had, I believe it was seven kids and 2 dogs. Okay, very, very hectic house. It was going to be very difficult for that specific seller buyer to sell their existing house and in the best condition possible, right? It was more advantageous for this client to take their large family, right? Go find a new house, use Ribbon's cash and buy it. And then they specifically changed a couple, like 2 rooms carpet and painted the house so that it was ready to rock and roll in order to sell it on the open market for as much as possible. The home on my screen is the home to purchase, the one that Ribbon helped them make the offer and win the contract on. So specifically, list price on this house was $389,500. We valued the house at $406,000. So that agent and that buyer could have offered up to $406,000 on this specific property. The agent and the buyer chose to contract at 385 on this specific home. Okay. We gave them what the daily rate of rent would be for that specific house, which is in full transparency to a buyer. When they log in underneath you, they can see this as well. So when that ribbon valuation that we just talked about, right? When you add those 3 properties you're going to go see tomorrow, we're going to let you know what the max ribbon value is. In this case, it was 406, and what the daily rate of rent would be. And in this case, it was $99. The ribbon fee at 385, okay, remember, was 3%. Why was it 3%? Because we're buying this house. That's what this client wanted for their specific situation. So immediately the agent and ribbon, we're thinking together, okay, what type of offer is going to be the strongest offer to make here? How do we negotiate in that 3% ribbon fee? Excuse me. So on the right-hand side of my screen, you can see exactly how that fee was broken down. In this specific example, we asked the sellers for $5,000 in seller paid closing costs, and the buyer decided to put the remaining 3% balance in their earnest money in between their due diligence. So this is exactly what Terry was mentioning. Between, they were a little bit lighter on due diligence and heavier on earnest money. In total now, when they made the offer, we knew where the fee was getting collected from. So on closing day, we bought this house. That's how we collected our money. And then in this specific example, the buyer's agent earned their full buy side commission, and they sold the existing house within 30 days. This buyer only needed to rent from Ribbon for 30 days on the new house, and they bought it back for the exact same price that we purchased it on their behalf for, right? They didn't have to move twice. They didn't have to worry about selling the existing house too soon and transitioning a very large family twice. And ultimately, this agent looked like the hero, right? Because they were able to sell for max value, plus get them the right property, and they just leveraged Ribbon's cash in between. So it was a really cool use case of the freedom to buy and then sell, and an example of that. Okay. At the same time, I want to kind of walk through what an offer upgrade case study looks like as well. So this specific client actually had an existing home to sell as well. Okay. Remember, the offer upgrade is very applicable, as Terry was mentioning, where we used it for the FHA buyer that's just struggling to win a contract. Same rule applies here. This just means that the buyer can access their mortgage on closing day versus needing Ribbon to reserve the new house. So this specific home to buy, okay, list price was $284,890. Ribbon value came back at $292. Agent and buyer were able to contract the home at list price. The rent came back on this house at $70 a day. Remember, this specific buyer wasn't planning to rent. That was more of the insurance policy of, hey, if I couldn't get financing by closing day, well, I need to be aware that I would be renting the house from Ribbon until I'm able to access my mortgage and buy it back. But remember, since it's the offer upgrade, it's only a 1% net cost of business on closing day. How this was negotiated in the transaction was they found this property on my screen. They made their offer. They asked the sellers for $5,000 in closing costs, and the buyer put down $35.46 in earnest money. So now we've got a total of $8,546 in the transaction. Okay. On closing day, we buy the house, right? We didn't have to buy the house, so we would only collect 1%. And so 1% is $2,848.90, which means that the buyer was actually able to take advantage of the excess money in closing costs. So remember, that seller agreed to $5,000. The Ribbon fee was only $2,800 and change. That means the buyer was able to, on the settlement statement, have $2,151 actually go to them in closing costs to be applied, to the lender costs and closing costs. So that's a really, really awesome use case of two things. We help them win the contract. They're able to still benefit from the closing costs, right? Negotiated into the transaction, and Ribbon didn't have to buy the house. So they took advantage of the pricing, and that buyer just made home ownership more achievable. And that agent was able to earn their full commission and then go help the next borrower or buyer that's actively shopping. Questions on those two examples. And do you feel like that's helping better understand how this is being negotiated and working in the market? Just curious, some feedback there on it as well.
Definitely. And I like this second option best. And especially for, like you said, clients that don't have one to sell, but they're already pre-qualified and seem to be a strong buyer anyway. But this would allow for the cash offer, and again, not really having to come out of pocket for them. I mean, they just have to understand clearly that like in this example, they're not getting 5,000
Right.
and seller paid closing costs. That's where the 1% to be paid to Ribbon is coming from. Is
Mhm.
that, am I understanding correctly still?
Exactly, Sherry, you are. And I can give a couple other examples. You know, Terry, I'm sure you've seen this as well, where look, we have some buyers that are, you know, a little bit more liquid, right? And there are scenarios where the buyer pays puts the full 3% between due diligence and earnest money. Remember, however you want to weight that. And then they're able to secure their own financing and know that Ribbon would only collect 1% from that deposit pool of money on closing day. But I think that's exactly right, Sherry. So I think it's just a matter of setting good expectations on the front end when we make the offer. If we get 1.5% in closing costs from the seller and you're choosing to use Ribbon's cash to help win the contract, then if they get their financing, they will be benefiting of that 0.5% that's remaining for them to apply towards closing costs. Exactly.
Is there a way to structure the offer where the buyer will get more closing costs paid?
Yes, great question. There is, and I think it really boils down to like, and in this example, okay, list price was 284,890. Excuse me. The Ribbon value came back at 292. Okay, this specific agent and buyer. Remember, we don't tell them where to offer. We just say, hey, this is our maximum we can go. In that scenario, I would suggest then what I've seen in the past is they potentially offer a little bit more because we still feel very confident in the value of the property, but we ask for a little bit more in seller paid closing costs. And ultimately that affects the net proceeds, right, for the seller. So we could have asked, in this example, we could have offered 290 and asked the sellers to pay a larger portion of the Ribbon fee. That way, or in closing costs, that way, if your client can get their own loan, they get a bigger chunk of change in closing costs back. Does that make sense?
Yes.
Ryan, but we would still have to stay, and Terry, you might jump in here, within lender allowed seller paid closing costs, correct?
Exactly.
That's right. Yeah.
Okay, so it's not like it could just be some separate fee out to the side, but they would still get their maximum lender allowed closing costs. Would have to be considered as part of the closing costs.
And what we would do on our end is we would be working with them and with you guys on the front on how to structure the deal. You know, if Ribbon came back with a valuation that was higher than what we were looking at offering, then we would try to take those closing costs up front. Because if we have them, we might as well take them and use them. You know, right now, every $1,000 on the payment's only about $4, you know, per thousand. So if you take the extra, then you can use it for the closing costs without much impact on the mortgage payment. It basically boils down to like everything else is what will the house appraise for, and, you know, where are you at contract price.
Yeah, exactly. So in that case too, if we ask for 3% in closing costs, let's just say the seller agrees to pay the full 3% on closing day. If your buyer can buy it right through Terry through the loan, we're only going to collect 1%. That means that 2% was left over for the client to apply towards closing costs. And Terry, correct me if I'm wrong, but I don't believe that would be pushing us over any, you know, allowables or credits available.
That's right. You'd be good there.
Okay.
One thing to remember, if your buyer is purchasing with an FHA loan, they have to rent from Ribbon for 6 months before they can repurchase. That's why with the FHA buyers, especially if they don't have a house to sell, I like to go in and use Ribbon just to get the contract, because you guys know how hard it is for FHA, VA buyers to get contracts right now. So if we could purchase it up front before Ribbon has to, then we don't have to have them wait the 6 months. There's an identity of interest clause that says they have to rent from Ribbon for 6 months and they buy in the 7th month.
Thank
Yep.
you for sharing that, Terry. That's very important information to know.
Absolutely. Making sure we set good expectations on the front end. Obviously, best practice for the FHA is like Terry mentioned, right? Income, assets, credit. Let's get everything verified. And then when you make an offer with Ribbon's cash, you're still able to control your closing dates. So if Terry says, hey, I need 30 days, or, Terry, if it's less, if it's more, whatever, depending upon that scenario, as the buyer's agent, you still control that. Okay. So you don't have to cash back your offer with Ribbon and go very quick, because you're going after the offer upgrade, which means you want to have time for, Terry and team and lender to be able to get everything in play. So we don't have a cap on how long, right? We back new construction. There's many times that, we've helped first-time buyers trying to get a lot convert to cash to a builder, or a buyer that needs to sell first that goes to a builder and they're not willing to take a home sale contingency. Remember, we can also support those types of scenarios as well. Awesome. Okay. So want to push through here a little bit. One thing that I really want to make sure we talk through is, what is our promise to you as the agent? Really three things we've broken it down to. First and foremost, dependability. I can't emphasize enough on the call how important our back-end team is and how awesome they are, really. We want to be a tool on your tool belt, right? When you have a buyer that you're looking at a Ribbon scenario with, you've got our customer success team to schedule a 3-way call with your specific buyer. When you make a Ribbon offer and it gets accepted, you've got our transactions team from contract to close, helping you navigate that Ribbon transaction so that it's not all on your shoulders. Our team is here to support, and we're really looking forward to working with you in 2021. At the same time, we're here to help you guarantee your commissions, right? When we say, hey, we're here to help you grow your business, we mean it. We want to see more buyers represented by their choice of agent throughout the transaction process, and speed, right? Everyone's agreed on the call. Market's moving fast. We need to be able to give you what you need to be able to present Ribbon as an option to your buyers. And so we don't take that lightly. Our valuations team is absolute rock stars. I believe we're averaging under 3 hours right now on turning a valuation back for you guys. So it's happening very, very quickly. You're also working with your Ribbon advisor. So today, if you get off the call and you're like, hey, I'd like to schedule 15 minutes with my, account representative, you can do that. Okay. You can sign into your account through your agent dashboard. You can go into the upper left-hand side of your screen and say, hey, Alex is my key point of contact. Let me schedule 10 or 15 minutes on the calendar with her just to talk through my specific buyers I'm working with right now. Today we talked a little bit higher level. Obviously, each buyer has a little bit of differences, right? A little bit more nuances. So speak with our team, understand their situation, how our programs work, and ultimately which solution is going to be best for them moving forward. And then I'll leave us really with two things. In 2021, feel free to take this program and sell it as your own, right? We've got some teams and some agents that are leveraging the program as their own home trade-in program, right? The freedom to buy before you sell through you as an agent, right? And through Lantern. So feel free to kind of get creative here. Let me know how our team can support. At the end of the day, we've been excited to work with you guys, and we appreciate the time on the call, ultimately to win more business and help more clients pursue home ownership. So if you have not signed up, or if you have signed up in the past and you don't know where it is, in the chat line, I've dropped a link so that you can access your Ribbon dashboard. When you access your Ribbon dashboard, like I said, you'll get your dedicated account manager in the upper left-hand screen, and then you'll be able to get access to our Ribbon addendum and our Ribbon marketing materials specific to your buyers and your sellers. My suggestion is when you get off the call, schedule that time today for end of the week or early next week. That way you can have a relationship with our team, and we'll look forward to helping you guys throughout this year. So after that, any other questions that I can help answer on the line? Want to make sure we're respectful of time.
I've probably worked with Ribbon on about probably 30 deals in the last year and a half or so. So if you have any questions, feel free to give me a shout anytime. I can kind of give you the scoop on how it plays out on pretty much any deal.
Love it. We appreciate you, Terry. Chris, thanks so much. I appreciate you having us on today. I will send the recording around. If you have any troubles getting connected with our team, let us know, and we look forward to helping you guys out through the year.
Perfect, Ryan. Thanks so much, man.
All righty, guys. Thank you. Have an awesome Thursday.
All right, you too, buddy.
All righty. Bye-bye.